Hello, and welcome to the November 10th, 2025 meeting of the Governmental Accounting Standards Board. Great to see everybody here on a virtual short version in between board meeting. We have one topic to talk about today, but first we have to approve the minutes of our last meeting, which was October 21st and 22nd. Unless there's any discussion on the minutes, do I have a motion to approve them?
So moved.
I got a first from Chris and a second from Diane. Excellent. All in favor, say aye.
Aye.
Aye. Any opposed? Hearing none, minutes are approved, and we can go to our topic, technical topic for the meeting today, which is revenue and expense recognition. Paulina, if I could turn it to you to start us off, that would be awesome.
Thank you, Joel. Good afternoon, everyone. So for the board's consideration today, we have a single paper that addresses non-monetary consideration. However, the topic in on itself, it's not a straightforward topic. It's a bit of a complex topic. And particularly if we look at the FASB guidance, includes a degree of important challenges that are associated with the paper. However, when you take the topic and put it in the context of our project, non-monetary consideration is a little bit broader. It's not only just paying payment for an exchange revenue in a contract with a customer. We have two different types of revenue. We have two different types of expenditures. And so from that perspective, we had to run through a gamut of issues to make sure that we were able to put things together, which increased the complexity of the topic. As we will be sharing with the board throughout the discussions this afternoon, we'll be sharing task force comments. One of the pervasive task force comments was the complexity of the topics in the paper. And I just wanted to highlight for you that the complexity also comes from the structure of the paper. We could have created a single paper for bifurcation, a single paper for non-monetary, for donations, a separate paper for this topic. But when we were trying to put it together, the reason the project staff thought it was important to put all these things together is that although FASB Topic 606 addresses payment of non-monetary consideration for exchange revenues, those threads would need to be thought through along other lines of scope issues in our project. With that in mind, so that's why the paper became what some believe a little bit complex, but I thought it was important to just highlight the breadth of topics that were addressed. And in that vein, I also wanted to ask permission to the board to let us rethink the category A expense proposals. I think we need to bring that topic back in a second paper in a subsequent meeting. And so for that reason, we will be removing board discussion questions 12 and 13 in the paper and be bringing them back for your consideration at a later date. Lastly, but not leastly, questions 7 through 11, the way they were crafted in the board paper just said revenue. And perhaps we could have, should have been more explicit in our board discussion questions and letting you know that those questions broadly were applicable to revenue category A and B. When Mary Beth makes the presentation, she will remind us of that, and she will read the questions as category A and category B revenue, just to make sure that when you provide your decisions, your tentative decisions on this issue, you are aware of both issues. So with that very high-level introduction, there's three of us who are going to be presenting the paper all along. Brett is going to get us to the first piece of the paper. So Brett, go ahead.
Thank you, Paulina, and good afternoon, everyone. The first issue addressed in the paper is to consider whether bifurcation of transactions should be included in the project. The guidance provided in FASB Topic 606 is limited to non-monetary consideration provided in revenue transactions. However, the applicable topics associated with this project are broader and include bifurcation of transactions, donations of capital assets, and consideration in non-monetary form applicable to Category B revenue transactions, in addition to the applicability of non-monetary consideration to Category A revenue transactions. As noted, stakeholders requested consideration of guidance similar to FASB topic 958, which also is included in existing GASB guidance in statement 33. The project staff analyzed several transactions, including fundraising activities, research grants, and category A transactions when consideration is lower than market value, and did not find a justification for bifurcating transactions. The project staff notes that the categorization methodology in this project is intended to identify transactions as either category A or category B based on the presence or absence of performance obligations, and believes the methodology clarifies that a single binding arrangement may include more than one transaction. This approach is binary, which is different from existing guidance that is based on value and therefore not binary. Additionally, the project staff believes that it is incongruent with the categorization methodology to have transactions that partially include a performance obligation and partially do not include a performance obligation. The project staff acknowledges that there are complex transactions that will require significant exercise of professional judgment when categorizing those transactions, such as the research grant examples provided in the paper. However, this issue would not be removed through bifurcation. Category A transactions where the consideration provided is not representative of market value, the project staff believes the categorization methodology would have them as category A revenues, and they would be recognized in accordance with the performance obligation approach. In addition, the guidance provided in Statement 103 would assist in communicating through the display requirements for subsidies that the government does not fully recover service costs. Primarily based on the outcomes expected from the categorization methodology, the project staff does not recommend including bifurcation guidance in this project. And with that, I will pose board discussion question 1. Does the board believe that this project should include guidance for bifurcating transactions between category A and category B? And the project staff does not recommend retaining existing guidance regarding bifurcation because it is inconsistent with the proposed categorization methodology. And task force members who provided feedback generally agreed with the project staff recommendation.
Thanks, Brett and Paulina. Board member responses to question 1 about bifurcation. Comments? Questions? Diane?
I agree with the staff recommendation. I think that you can look at a binding arrangement and think that it's just one transaction, but once you get into splitting up the transactions, instead of bifurcating it, you would just allocate the amounts to each transaction, treat each one separately, and then it would be resolved with the categorization. So I agree with staff recommendation.
Thanks, Diane. Jackie?
I also agreed with the staff recommendation and basically just exactly what Diane said. You know, once we look at the contract or the agreement, then we can divide it into the transactions. The transactions then would allow us to categorize. So I agree with the staff recommendation.
Thanks, Jackie. Robert?
I also agree with the staff recommendation, the fact that the conclusion about you can't have a single transaction that has both a performance obligation and not have a performance obligation, you know, and the inconsistency with the categorization methodology that the board's tentatively decided on was compelling to me.
Thanks, Robert. Chris?
I agree as well. I think, you know, one of the things that we often talk about, a recurring theme, is around words mattering. And I think in this case, the words really matter. And that when we move forward with education, someone can truly maybe understand it when they're talking about their transaction, and maybe they mean a binding arrangement and not a transaction when they're talking about bifurcating or splitting something up into multiple pieces. And so you can see when you take a step back how it's very easy, or how it could be. I understand what the staff is proposing in the paper, and I agree, but I can see how it's very easy by applying the slip of different vocabulary to try to explain something, how you find yourself in a space that you shouldn't be. So I agree with the staff recommendation, but I also just want to say as we move forward, we're going to have to stress the importance of this is what you mean, this is the term here, because it's very, very easy for you to be thinking from a binding arrangement standpoint, but maybe say a transaction, no, that transaction can't be bifurcated, and you confuse somebody completely with where they're trying to go. So I agree with the recommendation, and I appreciate the staff's explaining of this issue in the paper.
Thanks, Chris. Carolyn.
I agree with the staff recommendation also, as they emphasize in their analysis, a transaction being performance and non-performance is not consistent with the categorization methodology. And I also think that if we did introduce bifurcation, it would just introduce unnecessary complexity. So I want to keep this as straightforward as possible. So I agree with the staff recommendation.
Thanks, Carolyn. Jeff.
Yeah, so I will agree as well. I think, as is laid out in the paper, there's the difficulty of how allowing for bifurcation would run counter to what we're trying to achieve here with the categorization. And I do recognize that through some of the examples, right, there's the temptation, right, to see bifurcation, right, as a way out of what could be some very difficult decisions about how to categorize something. And I think we'll experience that as we go through whatever illustrations and things like that, because certainly when I'm reading the examples of the paper, I'm like, part of me is saying, yes, part of it's this and part of it's that, right? And then I get hauled back to reality and recognizing about how that doesn't work with categorization, nor does it work with this notion that we're not going to rely on value as an indicator of categorization. So for all those reasons, I agree with the recommendation.
Thanks, Jeff. So I agree with the staff recommendation here, but I'm going to build a little more on really what Chris and Jeff both talked about. And that is that you start with the binding arrangement, and then from the binding arrangement, you could have multiple transactions, you could have one transaction, you could have multiple transactions, multiple binding arrangements that make up a transaction too. So there's a lot of that goes on, and this is what Chris is talking about in the terminology between binding arrangement and transaction. Once you find your transactions, that's what you've asked in this paper, right? Can that transaction be bifurcated? And like all my fellow board members, I agree it shouldn't. That would be counter to everything we've kind of built so far based on the categorization methodology, taking value out, et cetera. But it really kind of came to me in the examples and really distinguishing the example of the university that receives $5,000 for the golf tournament, and that being two transactions because one was a conscious contribution to the university, the other was to pay for golf, versus a government acquiring land that is from another government at much less than fair value. And that's one transaction because they're just acquiring land. Well, that is a relatively subtle distinction between one that has two economic substances, conscious contribution and golf, and the other that's one economic substance, which is I acquired land. I don't know that everybody's going to see those as two transactions in one. And so anything we can do to build out, and this is a little bit what Chris was talking about, making sure the words are talked about when we talk about them, and Jeff with illustrations or examples. It's not so much the bifurcation or lack of bifurcation once you get to the transaction. It's the identifying the transactions within the binding arrangement that I think I don't say we have to build out, but we got to be sure we help people as much as possible, understanding that it's going to be professional judgment. And at some point, there's only so much we can do with words and examples and illustrations to help people. With judgment, there's still going to be situations where we just get inconsistent results. But I think the more we can do around that, the better. So that was a long way to say, I agree with you, but there were other things in here that gave me concern about the other part, the transaction part, not necessarily the binding arrangement part into transactions, not the can transactions be bifurcated.
Certainly very appreciative of the feedback, and the project staff is moving towards very much trying to work through the issues of determining how to deal with this. There's a piece of guidance in the LISA standard in GASB and the FASB topic 606 that talks about contract combinations and the criteria or the circumstances in which it's important to do it. And so as we put those proposals together for the board, I think one of the things that is really not feasible to avoid is understanding the permutation of the categorization unit of account. If you classify only a contract, you're just going to put the contracts together and you're done. But when you're putting contracts together and then you have to go another layer and go, well, then what are my transactions? I think that puts the pressure on back to at least having to have a second look about, is the transaction definition sufficient to get you there? Do you need some additional guiding principles? Is just a matter of examples, but at least try to elaborate on the concerns that the board has expressed, because we pretty easily saw in the contract combination that this distinction was going to be something that we will have to work through. So stay tuned, the papers will come, but definitely very much acknowledge and recognize the importance of the feedback the board is providing on that issue. So with that, we would be moving to the second topic on the paper, which I'm going to take care of, which is the category B measurement for donations. As we noted in the paper, the donations are already addressed, and they were initially addressed in Statement 34 as fair value, then they were subsequently modified in Statement 72, and the donations of capital assets, the donations of works of art, and the transfer of capital assets under service concession arrangements were identified as to be measured at acquisition value. As we noted in the paper, the difference between acquisition value and fair value is a couple of market assumptions that create an exit versus entry price. The issues that are associated with if a government receives a capital asset, an asset that is going to be used for capital purposes, so it's going to be using to provide services, if measured at fair value, it can create a problem with the transaction cost that causes a day one loss. And this was the adjustment, therefore, that was done in the Statement 72. So this guidance has been essentially applied for quite some time. However, the challenge that we identified in the paper was the issue of the other side, when the government is the one providing the donation to a counterparty. And in that circumstance, the guidance simply said donated capital assets report at fair value, but it doesn't say whether the donor or the donee is reporting in that manner. And so we propose in the paper to consider what would happen if the government is the donor and transferring, let's say state government is transferring a piece of land to a school district to build a new facility. And the state has acquired this piece of land decades ago and has a very, very small carrying value on the books. And then when transferred to the school district, maybe this property is located in a very area of development. And so the fair value or the acquisition value of it at this point in time may be significantly higher or different. And so will the government be then required to take the carrying value, increase it to acquisition value, and then donate it and then remove it from the books? And so this approach caused the project staff a little bit of concern, because particularly of the provisions of Statement 48, where the board put very specific guidance that addressed the situation when assets are transferring within the reporting entity. And the concern in there was the way we normally explain it very colloquially internally is when you transfer $1 from the left pocket to the right pocket, you don't create value, and all of a sudden you have $10 million. And so when assets are transferring in that manner, it appeared to us that a similar thought can be articulated in the context of a government is donated a piece of land, is not creating value to increase it and then to give it away. And so therefore we are recommending that the board make an explicit adjustment to the existing guidance that clarifies that a government receiving the capital asset then will be subject to existing guidance in Statement 72, but the government transferring the asset to another entity as a donation be reporting as carrying value, so that way it doesn't create this problem. However, as the project staff was working through these proposals, one of the issues that become of concern is that there is a miss of information, because then the user of financial statements doesn't know, because presumably the carrying value is small, and so then the removal of the carrying value would be just category B expense with a small amount, and potentially there's a loss of information for a user to understand that that the state government in fact donated a fairly large piece of property, a fairly valuable piece of property to a school district. And so in context of that, the project staff is proposing to add this as a potential topic to be assessed for disclosure requirements. Obviously, we're not recommended to be a no disclosure. We're recommending for the assessment of essentiality to be considered at a future date. In addition to the donation of tangible capital assets, we also believe that it was important to put proposals to clarify the treatment of commodity donations. As we mentioned in existing guidance, we don't have an explicit piece of this, and we have encountered situations where state and local governments receive commodities as grants, and their question always comes about, how do I measure the incoming donation? The example of the cheese was very prevalent at some point in time. School districts receive a significant amount of commodities in terms of their school lunch programs. And during the pandemic, as we mentioned, there was both the vaccines and the PPE, the private protective equipment that was transacted. And it caused a lot of questions about the measurement of the receipt of something other than a capital asset. The project staff is proposing that, consistent with the proposals for tangible capital assets, that the donation of commodities be reported at acquisition value and be transferred out at the carrying value that the government has. In addition to those two major topics, the project staff decided to just address as a very brief issue, because we provided in the literature review the GASB guidance for 958 non-for-profits that is associated with pledges and other asset donations. And in the pledges side, we just wanted to clarify that the FASB required pledges to be measured at fair value through a fair value option, and that option would not be applicable for governments because the provisions Statement 72 does not provide a fair value option to adopt. Therefore, anybody measuring a pledge in the governmental environment would have to select a different measurement attribute. With that, I will pose board discussion questions 2 through 6 in order, and obviously one by one, and with task force comments. So question number 2, does the board believe that existing guidance requiring governments receiving donations of tangible capital assets be retained and required to be measured at acquisition value? The project staff recommends this approach, and task force members who provided feedback generally agree with the project staff recommendation.
Thanks, Paulina. Board member responses to question 2. Chris?
I agree with the staff recommendation. We've talked a lot about this in the past. To Paulina's point about the not creating value and moving from one pocket over to the other. And so in staying principled and utilizing that carrying value, I think this is most appropriate, and I agree with the staff recommendation. And we're just doing 2, and then we'll just go. Okay, thank you.
Thanks, Chris. Robert?
I agree with the staff recommendation as well. The consistency that just because it's a donation, I mean, if you were acquiring this and exchanging resources for it, that would be your acquisition value.
Thanks, Robert. Jackie?
I also agreed with the staff recommendation. Like my colleagues, I believe that following the existing guidance in this area, we've already got existing guidance. So I think that makes good sense. And it makes good sense that at the time that the receiver receives the donated asset, it should be at the acquisition value.
Thanks, Jackie. Diane?
I agree with staff recommendation. Like Jackie said, we already have existing guidance on this. Statement 72 amended the guidance in statement 34 to define acquisition value, and that all makes sense.
Thanks, Diane. Carolyn. Carolyn, you going?
Yes, I'm sorry.
That's all right.
Can you hear me?
Yes.
Okay, great. I agree with the staff recommendation. Existing guidance should be retained and followed, basically for a lot of the reasons that my colleagues have already stated, but I do agree with the staff recommendation.
Thanks, Carolyn. Jeff.
Yeah, not much to add here. This was the easier one for me to grasp here, so I'm not going to spend too much time on it. Maybe talk a little bit more about the next one.
All right, Jeff, thanks. I agree with staff recommendation as well. It's existing guidance 72. I think of note that the paper points out that we just did a post-implementation review of 72 that just was completed earlier this year, and no problems were really identified with the standard or with this specific provisions related to acquisition value. I think it does make a lot of sense. Given things we've heard governments consider doing, like contributing capital assets to a pension plan and trying to get fair value and things like that, that don't make sense when you're going from one pocket to the other. This makes a whole lot of sense to retain.
Thank you. So question number 3, does the board believe that existing guidance should be modified to require that a government that is providing a donation of tangible capital assets to another entity, the transaction be measured at carrying amount? So this would be a modification because existing guidance doesn't mention what to do for the donor. The project staff recommends this modification. However, task force members who provided feedback generally agree with the project staff recommendation. A task force member disagree and believe that measuring the donation of capital, the capital asset at carrying value is inappropriate because the transaction should be measured at fair value. In their view, the donation liability would have had to be measured at fair value. They believe that measuring the donating at carrying value distorts the donated capital asset user information to users.
Thanks, Paulina. Board member responses to question 3. Chris.
Hey, Paulina, just to follow up. There's not explicit current guidance, but we do have practice. And what we're saying here, the staff proposal follows common practice generally.
So we don't receive this question as frequently. We have received a few times, and then we run into this conversation that I just finished telling you about, right? So you have a piece of land at $10,000, and the piece of land is worth $10 million. So do you mark up 9.999 and then create, so you would have a gain or fair value gain of some sort, and then an outflow for a capital for non-exchange expense of $10 million? And then the next question that invariably those governments ask, do I net them? And so you get all these very difficult conversations. And again, the few times we get into the phone call, we advise people to not report them in this manner because it creates this grossing up. We don't see a technical justification for the grossing up. And so this is what we have advised, but again, the guidance is not tremendously explicit. So
that said, and appreciating your clarification, your further explanation, I agree with your recommendation and think that that's the best way to handle these sorts of transactions going forward.
Thanks, Chris. Robert.
I would agree as well that writing that up, and Pauline's extreme example there really would, that just doesn't feel right. I mean, I don't know if she would be doing this on feel, but it just to create a significantly different value based on, because it wasn't an investment. I mean, it was held for a, it was used to deliver present service capacity. The one question I did have, which I was just a confusion, and I should ask you before, was on page 19, the last paragraph, the distinction between historical cost and carrying value, unless my brain isn't working these days. Isn't historical cost an element that in determining the carrying value?
So the definition of historical cost in concept statement 6 is
Okay.
the purchase price.
Right.
And so then we were concerned if, for example, we're dealing with a building, a land would not make any difference. But if we're talking about a building and you
Mhm.
have acquired it 20 years ago, you would have depreciated it. And so the
Right.
carrying amount is a historical cost minus the accumulated depreciation. But in the application of standards, sometimes we refer to historical cost as the netted amount.
Okay.
And so but in statement 48, we call it the carrying value to to make absolutely sure that we convey that it was the purchased amount minus the accumulated depreciation. That's the amount that moves between the balance sheets of the entities transacting.
Okay. That makes sense. Thank you.
Thanks, Robert. Jackie?
I also agreed with the staff recommendation here on the donating of a tangible capital asset, because to me, the grossing up to the acquisition or whatever other value you'd want to make at the time of donation would create an artificial flow through the financial statements that doesn't really exist. I mean, the government's not getting any benefit from that gross up to a gain. So it kind of misrepresents what the bottom line would be on the flow statement for government, in my opinion. So to me, the donation, it should be at the carrying value or book value is what I would have called it. And I might have thought a little bit differently about this if this had been an exchange transaction instead of a donation. But with a donation, it just doesn't make any sense to me to do the gross up.
Thanks, Jackie. Diane?
I also agree with staff recommendation. I found statement 48 really helpful, where it talked about transferring the capital assets within the same reporting entity. I know we're talking about not within the same reporting entity, but that's it's a nice groundwork for a foundation for guidance that already exists, and just expanding it to modify it that government providing a donation would follow the same guidance.
Thanks, Diane. Carolyn?
I also agree with the staff recommendation. For me, it was adding guidance and structure to a situation where there was none previously, and it was based in existing, what we're proposing or clarifying is based in existing guidance. So I ended up agreeing with the staff recommendation as far as this question is concerned.
Thanks, Carolyn. Jeff?
All right. So as I hinted, this one was a little tougher for me. And when I initially went through it, I was thinking about it like the task force member who was talking about it as, why isn't this fair value? And it's probably because, I'm not thinking like an accountant, right? I'm thinking about a user, like a user. And that user says, that government had an asset that's worth $1 million and they sold it for 100,000. In other words, they have foregone $900,000 by the exercise of that decision. So but I do understand that potentially the difficulty here of trying to, run this through. And I don't have as much trouble as Jackie, because I could see it like it goes up and then you take the loss when you get rid of it. So I would see that as a user, I would see that choice that the government's making. However, I do see some issues about, well, it wasn't held as an investment, it was held as a capital asset, right? So how can I remeasure it? I run into obstacles like that. And then as I think about it some more, to me, this sort of harkens to tax abatements, where a government has made a choice, right, to not tax somebody because they've made an agreement at a rate that they could have. In other words, there's foregone revenue there. And in tax abatements, we have a disclosure that discloses what those foregone amounts are. So I know there's a question coming about the staff's recommendation that maybe we should investigate whether a disclosure would be appropriate here. But that would be, to me, a way to address what I'm thinking about, right? Like how to make apparent that this government made a choice here. They could have potentially gotten more revenue, but they made a choice not to do that, right? And so how can the users see that that choice was made, and that disclosure may be a way to do that? So because of all that, I came down on the side of agreeing with the staff's recommendation.
Thanks, Jeff. So I agree with the staff recommendation as well. And sounds like Jeff and I will have a conversation when we get to the disclosure part. Maybe I'll save some of my ammo here. But Paulina, correct me if I'm wrong. Like I know we don't have existing guidance that covers this specific situation, but in effect, 72 rejected the idea that receivables and payables should be at fair value, right? It took financial instruments out. That wasn't the right work term, but it took them out, right?
Right. So in 72, the board did not go with wholesale of all financial assets, whether instruments
Okay.
or receivables, go to fair value. It did not go
Okay.
there.
Right. And so, because that's in effect what you're doing, right? You're kind of saying, well, I've created this payable of a donation that I'm making and an expense. Should that be at fair value? And I'm settling it with this capital asset. Should that be at fair value or not? So we kind of have guidance on it. I hear what Jeff is saying. I totally get how a user might look at it the way Jeff described, in that a certain type of user, right? Maybe a bondholder who's going, I need to get repaid. And if you're just giving assets away that are worth X and I'm only recording Y, I kind of like to know that as a bondholder who hopes to be repaid, and that you're getting the most out of this asset that you're giving away. But if I'm a citizen user or a legislative user, or et cetera, that asset, I paid this amount for it. That's what I've had it recorded at. I didn't buy it with the expectation that I was going to use it to generate cash or money. That's why it wasn't an investment. I bought it to do something, to have present service capacity, to use it in operations, and it had this cost, right? And I just struggle with the notion that, that a citizen might go, well, they used my tax dollars how many ever years ago to buy this thing, they used it, whatever, and now they've sold it. Well, and what did they sell it for, right? If they sold it for that much less than its fair value, there was probably some other kind of public purpose for what they were doing it for. And so I don't know. I struggle a fair amount with not just the complexity that it might add, but kind of how it seems to go against everything else in our guidance, to translate this to a fair value at the end, just because I disposed of it. And we'll get into commodities in the next couple of questions. But so that's an agreement with the staff recommendation here, and a foreshadowing of maybe a discussion Jeff and I will have when we get to disclosure.
Thank you. So I will move on to question number 4. Does the board believe that governments receiving donations of commodities that may be reported as inventory should recognize the transaction at acquisition value? The project staff recommends this approach, and the task force members who provided feedback generally agree with the project staff recommendation.
Thanks, Paulina. And Paulina, it's fair to say we do have examples of this in history, or actually almost every year, in that if a government, or especially a school district, is participating in the school lunch program, or that they get sometimes from the federal government commodities, food, that they then, and instead of cash, they get the actual food that then they distribute for the related program. Or back in the pandemic days, we had the PPP stuff that was being provided to the governments, and without information, they just kind of arrived, and what do we do with that, right? So this isn't something that kind of doesn't necessarily, it doesn't not happen. It actually happens, relatively
Happens.
routinely for some
I
governments.
We believe, yes, we have observed it. We have seen some degree of routineness. Like you mentioned, the pandemic was probably the biggest, most notorious version of it. And unfortunately, while some governments do apply some version of recognition, other governments look at it as there was no cash flow through. So kind of not always addressed. And so we felt it was important to clarify. We have implementation guidance that talks about the cheats, but it doesn't talk about the measurement attribute.
Very good. Thank you. Robert?
I agree with the staff recommendation. I mean, I think compelling thing is inventory is an asset. It's not just like capital assets are assets. So consistency in the measurement concept appears appropriate.
Thanks, Robert. Jackie?
So I went along with the staff recommendation on this one because it allowed for consistent application on how we were handling donations. However, having been in the commodity market myself because of what I did with state government, actually being able to assign acquisition values to commodities is not necessarily going to be something that's that easy for some governments to do. And I get to the cost beneficial thing again, because if we're talking about food commodities, the rollover in the inventory may not make it all that important to the action. But when you're getting food products from the federal government, sometimes those costs are very different than what acquisition costs would be, either because the product has been stored in their food vaults for so long that the price has changed, or because of the way they take foods off the market. And when they send them to you, the acquisition price could be different. For many school districts, probably won't make a difference because it's not going to be material. But you also have very large school districts, and you also have reservations that handle huge amounts of commodities and have huge inventories of commodities. So I think that the commentary we get back in the exposure draft on this one will probably be interesting.
Jackie, what's the alternative? Like fair value or?
No, I'm thinking that for most food commodities, now this didn't happen with some of the other things that Paulina and I talked about. And in fact, some things aren't really commodities, they're actually inventory. But for food commodities, the prices come on the transactions. The shipping documents and the receiving documents have prices and quantities on those. So what we did, and I'll be honest, what we did was we just used those prices when we were recording and shipping as the intermediary. We were the state. So we would put them in our inventory into our warehouse at those prices.
In other words, it was
historical cost.
The cost of the
Yep.
original acquirer
Yep.
then translated that historical cost to the recipient, even though that could have been 4 months later or whatever. And so if it happens quickly, acquisition value is probably pretty close. But if it's sat, for your point, sat for a while, but the alternative to that is when they don't have that information as the recipient, now they've got, like, how do they get historical cost from the provider if the provider doesn't want to provide it, right? So
or there isn't something, like Paulina
Right.
said, with the COVID vaccines and stuff like that.
Yeah.
It's
Okay.
going to be an interesting discussion, I'm pretty sure.
Very good. Thanks, Jackie. Chris.
I'm on the same exact page as Jackie. That was my experience from a state perspective, and from a auditor of a state having to go into the warehouses and all of the fruit cups and all of that stuff that was there, and how they priced it. But I guess I came out a little different than Jackie, but ultimately at the same point, which was I didn't think there would be much difference between acquisition value and essentially the historical cost because of the nature of the stuff that we're talking about there. and the volume. So I just thought that at the end of the day, it wouldn't really be material. And I understand Jackie's point that sometimes for big school districts or big entities, it may be, but I just thought, they take a lot of pennies and the differences to round up to the point where it would be significant enough to really make a difference. So I agreed with the staff recommendation, but I think it is worth noting Jackie's point.
Thanks, Chris. Diane.
I didn't know if Paulina had a response to that before I jump in.
Sorry. Please,
Yes,
Paulina.
if you don't mind. I think you guys are making an excellent point, and I just wanted to provide some context a little bit. Sometimes the transaction amount that is transacted can represent multiple measurement attributes. And so if we're talking about the historical costs that the federal government paid, and it said that it was maybe a couple of weeks to the time that it got to the state government, I'm not sure I would argue that that's the difference with acquisition value. But as Chris noted, the more time lag that it passes, then we are beginning to call into question. And so to the extent that something can be used as a proxy for estimation, you would be in a good place. But the minute you start having issues with lag, like Jackie alluded, that she sat it on the vaults for maybe 5 years sometimes. And so whatever the federal government used to acquire may not be really representative of today's acquisition value. And so this is just the nuances that a government would have to traverse in those circumstances. But I just want to mention that there are circumstances in which the transaction price may be representative of historical cost and acquisition value.
Thanks, Paulina. Diane.
I agree with staff recommendation, and I also agree with what both Jackie and Chris were saying. I know we received a lot of commodities, a lot of stuff during the COVID, the pandemic and the PPP stuff, and trying to value all of that. But I think the proposal the staff is making and using the acquisition value is consistent, and people will just figure it out.
Thanks, Diane. Carolyn.
I agree with the staff recommendation. Working for a large school district, the commodities that we received were not material. So there was not a lot of, effort in as far as trying to be as exacting as we probably could have been as far as measurement. However, I do believe there's definitely value in giving guidance so you can see consistency across the governments that it's not, an immaterial number. I'm hearing what my colleagues are saying, and I'll be very interested. For a smaller school district that gets a lot of commodities, is probably this is going to be really beneficial for this guidance for them to receive. For larger ones, it's going to be beneficial, but not, like I said, it's not for ours. It was not a material number. So with all that said, I do agree with the staff recommendation, but I am looking forward to the to the feedback that we receive.
Thanks, Carolyn. Jeff.
Yeah, so I think I'm pretty much where Robert was. We have existing guidance. It covers assets. This is an asset. It's coming into the government. So acquisition value, like in question 2, made sense to me here. So I agree with the recommendation.
Thanks, Jeff. I am pretty much where Jeff is too. I liked the consistency with 72. These are assets that we're trying to get the present service capacity of, like the capital assets, not investments, because we're going to use them for public service. We're not using them to generate income. I am sympathetic, I guess, to Jackie and everybody's comments that the number you receive from the federal government may or may not be acquisition value. I would imagine in most cases, like has been said, it's probably not that material. That's the best information they have. They're probably going to use it. I guess in that to me goes along with in other situations where you're not going to have that, then we're now giving somebody something that they could better estimate, which would be, well, if I acquired it from somewhere else, what would it cost me, as opposed to trying to go get the historical cost from the entity that donated it to you. Kind of offset this, but would be interesting to see what the feedback we have of, if a government receives cheese, let's say, from the federal government, and they see the historical cost, the value that they've got, and they go, wow, I pay a whole lot more for the cheese now. This must be old cheese. And so the number seems really different. And now they feel like they have to make the adjustment. If they know that and they see that, that's probably easy enough to do. How much do they feel like they have to verify that they have to prove that in some way? Or how much can everybody just going to accept, hey, unless something comes to our attention, otherwise we're just going to accept this federal government amount? How much people, you kind of are balancing those things to me. And on balance, I agree with staff recommendation because I felt like we would be okay here, but it'll be interesting to see if other people give us more information to the contrary.
Thank you. So question number 5 is obviously the reverse of the prior question, consistent to our recommendations. So that's the board believe that government's providing commodities. So this would be the case that the state government has received the cheese and now the state government is providing the cheese to the school district. Should it be recognized at the carrying amount of the government providing the resources? And for the exact same discussion that we have for capital assets, the project staff recommends this approach. And the task force members who provided feedback generally agree with the staff recommendation.
Thanks, Paulina. Board member responses to question 5. Diane.
I agree with staff recommendation. This is consistent with statement 48. It's the reverse of what we just talked about. I agree.
Thanks, Diane. Jeff.
Maybe here, Paulina, right, because there was a task force member in question. I guess it was
In the mirror, yes.
3 that said should be fair value, but I guess they didn't speak up on this one. Maybe
Correct.
because they were thinking that the magnitude here wouldn't be of a level that it would, commodities compared to capital assets. Do you think that was the reason?
No, the context is that task force, the industry that the task force members specializes, does not provide commodity donations.
Oh, okay. Yeah, but I sort of looked at this similar to the way I came down in 3. So that's why I agree with the recommendation.
Thanks, Jeff. Jackie.
I also agreed with the staff recommendation. It's consistent with the guidance that we already have. And so I think that makes good sense to have it be at the carrying value.
Thanks, Jackie. Chris.
I also agree with the staff recommendation.
Thanks, Chris. Robert.
I also agree with the staff recommendation for the reasons my colleagues do.
Thanks, Robert. Did we hear from everybody? Missing Carolyn?
I think so. That's the only one I don't have.
Can't tell if she's frozen. Oh. Hey, Carolyn.
Hello.
You're back with us. You were frozen for a minute. So
Okay, I think I heard Robert and I was trying to put my hand up.
okay.
But I
You
agree.
froze.
Yeah, I agree with the staff recommendation on this one, not because I froze, but because I agree with the analysis and I end up agreeing with the recommendation on this one.
Very good. Thanks, Carolyn. I agree with this staff recommendation as well. I don't have anything further to add at this point to what the staff has put forth and my fellow board members have commented on.
Thank you. So board question number 6, the last in this section relates to what we mentioned. So particularly in the circumstance in which a capital asset may be transferred at carrying value, The question is if the board tentatively agrees to propose the donation of tangible capital assets and commodities be reporting at current value, which you have. Does the board believe that circumstances should be included in the topics for assessment of its essentiality and consider as a potential topic for no disclosures? The project staff recommends this, and the task force members who provided feedback generally agree with the staff recommendation. A task force member noted that a strong agreement about the usefulness of the information to the user about circumstances in which a donated capital asset is recognized at the carrying value when the asset's fair value is significantly different.
Thanks, Paulina. I guess I'll start here because I could just, before Jeff tells, I could just give my rebuttal. Again, I see my concern here, and this isn't really, I mean, this is something for future consideration. I acknowledge that. So how strongly I feel, maybe a little muted, but it's not about essentiality to me. I'm gonna bet that there are users that think that this is essential. And I understand why, for the reasons I talked about earlier, that I'm an investor, I'm a bondholder, I want to make sure the government's getting all they can out of the assets so that I could get repaid. So when they donate something for way less than the fair value, I want to know that. I want to know that amount. I just think I worry not about, is that good information for the users and might they want it and it be essential, quote unquote, is that how different it is from everything conceptually we just talked about, not necessarily from complexity or cost benefit reasons, but this was a capital asset. I didn't buy it with the intent of selling it. It wasn't something that was at fair value. So why is the fair value, I won't say why it's not important, because again, I see why a user might want to understand that, but that wasn't my intent there. And governments donate these things for so many different reasons. There might be some public purpose as to why I effectively donated or sent it to this other entity for way less, a nonprofit entity that's doing, trying to mitigate homelessness. And so I give them a property for them to rehab and convert into housing. And I maybe, but I either donate it to them or I give it to them for way less than fair value because the public service is important to me. And that's what we're doing all the time. When a government sells water or sells whatever, all that stuff is at cost on our balance sheets, and then we sell it or we do the public service with it. The whatever, and I will say it's kind of hard because we don't create inventory a lot in our organizations, but transit operations, they have costs that accumulate, and it's all at cost. And the revenue is maybe or maybe not going to pay for all of that cost because there's a public service component to it. And so I just struggle with the idea of making governments put this out there when there's so many different reasons they may have decided to donate this capital asset for whatever reason, and it wasn't an investment to begin with. So I worry about putting it on the list, knowing that users will probably say it's essential because of how it contradicts the rest of the framework of what we account for. So, but again, let Jeff give his rebuttal and see what other board members think.
Yeah, so I mean, I think in listening to Joel, I mean, I think we should be careful here, right? Because I understand that this thing was, let's say, a capital asset for service, but the government has crossed the Rubicon, right? They've decided to get rid of it, right? So it's no longer providing service. So that argument that, well, we should do it because it was always providing service, and then we should just ignore the fact that they're no longer going to have it provide service. They're going to sell it, and that sale may be at less than what they could get for it elsewhere. So I think, from my perspective, it would be important information to seek from users about how they feel about it, because I think there's going to be, because I think if you pull the thread on Joel's argument, you would then say tax abatements disclosure should go away, because governments do tax abatements for economic development, and that's what governments do. They do economic development. So why should we have a disclosure that tells the users what's been foregone? And here, this is a disclosure to me that potentially will tell the user what's been foregone by the government. And so I don't think that tax abatement disclosures should go away, but I do think we should, at least at this point, put it on the list to users to discuss, because I do think that they're going to think this is important because it represents the choices that governments are making. And I don't necessarily think it will be confined to bond investors. I think other types of users are going to be interested in the choices that governments are making with limited resources as to how much they're seeking to obtain for this asset that they may be disposing of for less than a market price.
Thanks, Jeff. Other board member thoughts on this question? Jackie.
So I agreed with the staff recommendation on this with regard to putting out there for them to look at. I understand what both Joel and Jeff are saying, and donations can happen to anything, right? They can happen to another government, they can happen to a not-for-profit, they can happen to a corporate entity. And we have several of those that happen here in Florida. They'll all make the newspaper. I had the financial statements, I can tell you that right now, when the donation carrying value is much different than the sale price of the land or whatever it is that's being donated. And you're right, Jeff, that it's not just the analysts and the bond rating agencies that are interested in that. It's the citizens too. So while I think that most of the information will probably get out to the public before it ever shows up on the financial statement, I do think that this kind of a disclosure has value because it does go to the choices that we make as a government. So I support the staff recommendation on this one.
Thanks, Jackie. Chris.
I also support the staff recommendation, and I find myself more in Joel's camps, or actually not more in Joel's camp, but in Joel's camp as opposed to Jeff and yours. I do understand and appreciate the points that you're making, but I'm trying to figure out how to articulate, and I'll let some of my fellow board members go on, but I fundamentally see a difference between tax abatement disclosures and tax abatements that might be entered into by a government. And that's when I understand how you are relating them, but in government, at least as I see them and we're dealing with them, I don't want to connect that. I get your point. It's a slippery slope and you can get to that point, but I don't see the connection strong enough to send me over into your camp. So I agree with the recommendation, and I'll try to get my thoughts together in the next couple of minutes or see if I can.
Thanks, Chris. Robert?
I agree with staff recommendation as well. I probably was initially, before Joel, you chimed in here, probably a little more on what Jeff was saying, and and I've been struggling a little bit on one hand to say, well, if we didn't have the guidance that we're not remeasuring that asset because it's a capital asset, it's not an investment, and then you donate it and then you recognize a loss, would that citizen rancor that Jackie's referring to be clearly, we're not doing that. That's not how the accounting is, but that's what comes about. And on one hand, I also have a sort of a prevalence, that I don't have a sense on the prevalence of these types of situations, but if it's a significant difference, I can see how users, whether they're investors or other types of users, might be interested in that information. So at least I'd like to put it on the list. I'm not certain I'm completely there yet, but I kind of get where Jeff's coming from, and the capital asset side is the part that it's not an investment. And there probably was a reason why government A donated it to government B or not for profit or whomever. It might be a little different distinction if it was something that went ultimately in the hands of a private developer that then made a mint on it by selling it, reselling it to someone else at fair value.
Thanks, Robert. Carolyn.
I agree with the staff recommendation. A lot of what Robert was saying, I would just like to see it get put out and go through the screening process so we can have the conversation of does it meet the characteristics of essentiality or not. But I do see a big difference between this type of disclosure and tax abatement. So I heard a lot of what both Joe and Jeff said, but I'm still in favor of at least considering and getting more information as far as including this in some type of disclosure. So I agree with the staff recommendation.
Thanks, Carolyn. Diane.
I agree with the staff recommendation. I think that this should be put out to users to see if it is essential or if they use it for making decisions or assessing accountability. But I think it needs to be a significant difference, because if we just put it out as far as a difference, then we could get caught up in all kinds of small little things and that probably aren't even material. So I think the significant difference would be worth it.
Thanks, Diane. All right.
So the next section about category A non-monetary consideration is going to be led by Mary Beth.
Thank you, Paulina. Now moving on to the project staff recommendations about the treatment of non-monetary consideration for category A transactions. To determine the approach to account for this topic, the project staff reviewed FASB topic 606 that requires 1, the use of a fair value measurement attribute, 2, the assessment of non-monetary consideration at the inception of the contract, and 3, the exclusion of subsequent changes in fair value from the transaction price. In the governmental environment, the project staff believes that at the time at which an estimate should be developed for the measurement of said asset is at the inception of the binding arrangement, because of the need to allocate the total binding arrangement amount to respective transactions or performance obligations. However, the proposal to require the development of an estimate does not imply recognition would be required at inception. In addition, project staff recommends not requiring the remeasurement of non-monetary consideration between inception of the binding arrangement and when the asset is received to be consistent with the board's decisions in Statement 72. A more complex aspect of this recommendation is determining the appropriate measurement attribute. The FASB relies on fair value and does not have an equivalent measurement attribute to acquisition value. For governments, the choice between fair value and acquisition value may depend on the intended use of the asset service capacity. If an asset will be deployed in providing public services, acquisition value may be appropriate. If an asset will be held as an investment, fair value may be applicable. The project staff identifies 3 possible times to make this determination. 1, at the inception of the binding arrangement, 2, when a receivable arises, or 3, when the non-monetary consideration is received. Options 2 and 3 add complexity because the need to develop measurement estimates to allocate consideration among performance obligations. Therefore, the project staff believes measurement estimates should be developed at the inception of the binding arrangement. However, the project staff notes that asking a government to make such a determination about the manner in which an asset would be used before receiving the asset can be burdensome. The project staff recommends estimating fair value at inception, but making the final determination upon receipt of the asset with any changes in fair value and acquisition value treated as a change in estimate in the reporting period in which the asset is received. Guidance in FASB Topic 606 provides for circumstances in which the fair value of the non-cash consideration promised by the customer varies for reasons other than the form of the consideration. However, due to the lack of prevalence in the governmental context, the project staff does not recommend addressing changes in the fair value of non-monetary consideration arising for reasons other than its form. We want to clarify that questions 7 through 11 were intended to address Category A and Category B revenue. Therefore, I'm going to pose them in this manner. With that, I will now pose board discussion question 7. Does the board believe that for Category A and Category B revenue transactions, a government should measure the amount of non-monetary consideration agreed upon at fair value at the inception of the binding arrangement? The project staff recommends that for Category A and Category B revenue transactions, a government should measure the amount of non-monetary consideration agreed upon at fair value at the inception of the binding arrangement. And task force members who provided feedback generally agreed with the project staff recommendation.
Thanks, Mary Beth. Board member responses to question 7. Jackie.
I agreed with the staff recommendation on this. I think this is one of those areas that Chris talked about at the beginning where we have to be careful about the terminology and the language here because people getting caught up on when an estimate is being made and how it's being applied and all those types of things. I know I had to read it a couple of times to make sure I was clear on exactly what was going on here, but it seems to me that coming up with it at the binding arrangement level so that we can put it on there and have something to work with makes good sense, and delaying coming up with the actual amounts until when we know we have the non-monetary consideration in hand makes good sense, because I thought it was an elegant way to deal with the problem of whether we have to record it at acquisition value or fair value by coming up with an estimate and then delaying the actual amounts till the non-monetary consideration was in hand, to speak. So I agreed with the staff recommendation.
Thanks, Jackie. Diane.
I agree with the staff recommendation. I think that, first of all, coming up with that it will always be measured at fair value at the beginning is just makes it easier to just make that estimate, because it's always going to be based on that same thing. I think doing it at inception of the binding arrangement makes sense, because then it needs to be allocated. And then once that non-monetary consideration is actually received, it can be determined what it is. And I know that goes on to other questions, so I won't go there.
Thanks, Diane. Jeff.
Yeah, so another complicated one, right? And it took me a while, like with Jackie, it took me a while to get there, but I think I ultimately got there. One of the things I struggled with was this notion of us developing this fair value measurement estimate, right? I got caught up in this fair value is an exit price, acquisition value is an entry price. Why can't we use an acquisition value estimate? And then when I sort of think it through and say, well, then it's this whole notion of, right, not wanting the government to make the determination up front, right? An acquisition value would be for a capital asset, something used for services. And what if this non-monetary consideration is financial in nature, right? So fair value could capture that. I think the paper points out that when the government makes the determination, they can go to an acquisition value, right, and just have a change in estimate, right? So we would be covered there. Fair value could cover a financial asset. That's the non-monetary consideration. So I think I get covered there. So I think I ended up thinking, and then I was, concerned about, well, is this correct in the spirit of 72? And I think I agree with Jackie's view that this is kind of an elegant solution, because I think, right, 72 says that, when the determination is made, and now the determination wouldn't be made until the asset is received rather than at inception, right? So we're not doing anything that sort of runs counter to statement 72. So I think after all of that, I got to agreeing with the recommendation.
Thanks, Jeff. Carolyn.
And I also agree with the staff recommendation. The only thing that I added that wasn't said already is that I believe that this is going to be, in addition to a lot of the other areas, it's going to require a lot of education once we roll this out, and exposure, so people understand the logic behind how we are arriving at this but I do agree with the staff recommendation, so I'll just leave it at that.
Thanks, Carolyn. Robert?
I agree with the staff recommendation, but and maybe I'm saying similar things to what Carolyn just said, but I think it's confusing that we're basically saying measure it at fair value at the inception, but it's not being recognized. So then we're going to get to question 10 and talk about the difference. If it's not being recognized, what are you measuring and why are you measuring it? I mean, I think that's a question that governments may ask. You need at the inception.
Because how else would you recognize a receivable, particularly if you have a performance obligation over time? So let's assume that you have a binding arrangement and the transaction entails a performance obligation that you're going to satisfy over a period of 18 months. Okay. And the agreement is that you're going to receive stock is the easy way of saying the stock payment. And so if you don't have a measurement estimate at the very beginning, then you will be delaying recognition of the receivable that made over time. And then at the end of the binding arrangement, you recognize when you receive the stock. And so it has to do with the ability to recognize the incremental receivables that happens over time.
Okay.
Paulina, it's also, if I have one binding arrangement at inception, and let's say it has 2 transactions in it, I've got to, at inception or close enough at the first point, I've got to recognize one of them. I've got to allocate the overall transaction amount to the 2 performance obligations. And if the second performance obligation is going to happen later, that's the one that has the non-monetary transaction. I've got to be able to recognize the first one. So I've got to have been able to allocate the transaction price. So I have to know what the transaction price is. So I've got to put something in that bucket. And is that something fair value or acquisition value for this non-monetary thing that I'm going to receive later? And so it's both what you said, but also this initial transaction allocation that I have to do in those circumstances where I have multiple binding arrangements or multiple transactions within a binding arrangement or multiple performance obligations within a transaction, even, I guess.
And I think part of the challenges that we're facing is a little bit, and I'm sure you noticed this when we were working with GASB in the measurement presentation. Every time we said estimation, a lot of our stakeholders went straight to recognition. And what we were trying to communicate is in this case, because you have this allocation methodology and then you have this receivable over time, the only way to deal with the recognition is to develop estimates at the very beginning. So therefore you have an amount recognized. And then when you actually receive the asset and the amounts are different, then our proposal is to treat them as a change in estimate.
Chris.
Yeah, I agree with the staff recommendation. I mean, essentially talking about to all your points, we need a proxy until the time comes that we actually know what it is, and that proxy in determining that estimate, because we don't have the actual at that point, it makes the most sense for me for that to be fair value until and unless that true value is determined later on in the process.
Thanks, Chris. And so I think in the end, I'm good with the staff recommendation. I was kind of interested to see what the board said. I understand, for the reasons we have just talked about, I understand the reason you need to make this determination at inception, which is by default, maybe before you really want to be able to make this decision about how I'm going to ultimately use this non-monetary asset, like a capital asset. And so I understand why we need to do this and why we need to make a decision. Then it just became about, well, do I want the complexity of making governments just choose? Just you got to pick at the beginning. Sorry, this was when you entered the transaction. This is when kind of the economic values of the things being exchanged were set, because this is when I entered my binding arrangement. And so you just got to pick, how are you going to use the thing? And then that simplifies the process later, because I wouldn't then have these differences that we're going to talk about in the next questions. So I avoid complexity. but then I add complexity because now I'm forcing governments to make this choice probably earlier than they would want to, and maybe can because they don't have it yet. They haven't maybe thought through how they're going to use it or made that choice. And so you kind of, to me, in my mind, was balancing, which complexity do I want? And my hope is, this is to maybe Carolyn's point or others about education, that once we see and are able to educate the whole process and how from beginning to end transaction price is allocated and all this stuff, then it will make more sense and it won't be as maybe confusing about what this number is at fair value, how and when it might change and what you do with the change. Maybe when people see the whole thing, it won't be as complicated as that I'm worried it's going to be for them to understand. So in the end, I agree this is probably the better solution, but I worry a bit about complexity. But you know, there's going to be complexity one way or the other. We've just made this choice. So
Moving to question 8, does the board believe that for Category A and Category B revenue transactions, non-monetary consideration should be remeasured for changes in fair value of the non-monetary consideration between the inception of the binding arrangement and the receipt of non-monetary consideration? The project staff recommends that non-monetary consideration not be remeasured for changes in fair value of the non-monetary consideration between the inception of the binding arrangement and the receipt of non-monetary consideration. And task force members who provided feedback generally agreed with the project staff recommendation.
it's very bad. Board member responses here. I could start that I agree with the staff recommendation. To me, this follows along with the logic from 72 of not recording payables and receivables at fair value, which you would essentially be adjusting to along the way if we had to change this as it moved. And so it made sense to me that we record it, use it at this initial inception amount, and then we wait until a point in time, which I guess we'll talk about in the next question or so, of receipt of it to then figure out what we're going to do, figure out what that value is, and then make the adjustments at that point in time instead of doing it along the way. So I agreed with the staff recommendation here. Jeff.
Paulina, can I just ask a question? Something that Joel just said makes me think of a question. So are we because I, for a lot of the same reasons that Joel just expressed, I agreed with it as well. But isn't it the case, I just want to make sure I am understanding what I'm agreeing to. Isn't it the case that because we're not making this adjustment until the end, that the recognition along the way, by virtue of the allocations that were done up front, might be a little bit off, right? Like, and we just have to accept that, right? There's a trade-off there. And so we'll accept that. We'll, in effect, sort of true it up at the end, but along the way, the journey might be a little bit different than it could have been had we not made this decision, right?
Yes. I think the way we were thinking about it is essentially if the government is the seller, right, and agrees to receive consideration in a non-monetary form, what essentially the government is doing is taking the risk of the changes in the fair value between the inception of the binding arrangement, because the government would have negotiated. I mean, the government is not going to accept payment for a piece of land without understanding what's the fair value of the piece of land at the beginning. Right. But they are in fact taking the risk between the inception of the binding arrangement and the receipt. And so therefore, we think that is, in addition to Joel's conceptual reasoning, we don't report receivables at fair value, but it's also reflecting the gain or loss, which is a subsequent question, as you alluded, in our opinion, reflects that risk exposure that the government is accepting by agreeing to receive non-monetary consideration for the payment.
Yeah. Okay, thank you.
Thanks, Jeff. So you are agree still, Jeff, right?
Yes, I'm agree.
Thanks, Jeff. Jackie.
I also agreed with the staff recommendation. To me, it makes sense to carry through with the initial estimate rather than readjusting it periodically, particularly when we don't know what we're going to capture at the end when we get the actual non-monetary consideration. We could be going through a bunch of processes that in the end didn't mean anything because we ended up using acquisition value. So I agreed with the staff recommendation.
Thanks, Jackie. Chris?
I also agree with the staff recommendation. I thought Jackie said it well, and Paulina made a point about the term of the binding arrangement, right, and over time. So, and I think it feeds into Jackie's point. So, what are we doing? Like recognizing unrealized ups and downs on this thing, gains and losses in a sense over the term of a 2-year binding arrangement that we're adjusting to. And to Jackie's point, it's not even like a security, so it's not even like we know what the actual true value is. It's just all an assumption based on that initial fair value that we recorded as an estimate. So that seems to be very messy and not worth the squeeze, Jeff.
Thanks, Chris. Robert?
I agree with the staff recommendation. I echo Chris and Jackie's comments. I like getting in the squeeze as well as Joel's comment on the conceptual, recognizing payables and receivables fair value. No.
Thanks, Robert. Diane?
I agree with staff recommendation. I just think this is a real clean way of handling it. We're not changing up and down with the fair value and just recognizing a gain or loss when the actual transfer of the non-monetary consideration is made.
Thanks, Diane. Carolyn?
And I also agree with the staff recommendation for a lot of the reasons that my colleagues have already expressed.
Thanks, Carolyn.
Okay, moving to question 9. Does the board believe that for category A and category B revenue transactions, if a government agrees to receive payment in non-monetary form that can be either a capital asset or an investment, the determination of the use of the present service capacity of the resource should be made when the government receives the resource? The project staff recommend that if a government agrees to receive a payment in non-monetary form that can be either a capital asset or an investment, a determination of the use of the present service capacity of the resource be made when the government receives the resource. And task force members who provided feedback generally agreed with the project staff recommendation. A task force member believes that it is not generally burdensome to determine a purpose for the asset at the inception of the binding arrangement and does not agree with adding the additional complexity of requiring another determination of the asset's purpose upon the receipt of the asset. The task force member also believes a government should be allowed to change the use of an asset without violating GASB 72, as doing so would result in accounting that reflects the economic reality of the government's use of the asset.
Thanks, Mary Beth. Paulina?
Thank you. So I wanted to point out that there was a degree of concern about, as I mentioned at the beginning of the paper, of the complexity of the model, and it revolves really around this issue, which is the provisions in paragraph 68 of Statement 72 that says essentially, once the government makes a determination, it doesn't quite say when, but when you make a determination of the use of the asset, whether capital or investment, there is no reclassification, even if the actual economic reality of that asset has changed. So at the beginning of the acquisition of a building, the government determines that it's going to lease it for the life of the building. Midway through the life of the building, the economic reality of COVID changed dramatically. So the government decides to occupy this building for its own offices and its own services. And the change of the use has changed, unfortunately, because of the provision statement 72, the reporting will continue at fair value for the life of the asset. And that's really the complexity that you have contemplated in all the proposals thus far, is us trying to get consistency with the provisions of existing Statement 72, primarily because the scope of this project would not amend the provisions of Statement 72. There will be some modifications for the fair value, but the provisions of paragraph 68 would not, in our opinion, be subject to reconsideration in this project. So I just want to make sure that that was the major reason of complaint was the provisions of statement 60, paragraph 68 of statement 72, which we don't have an avenue to address.
Paulina, as I heard the comment from the task force member, it made it sound like the determination, they were worried about the complexity of the determination at inception, but we're not making a determination at inception, right? It's only the determination at receipt, right? So am I misunderstanding what they're talking about?
So the comment, the way was provided to us, indicate that it shouldn't be a challenge when you sign the binding arrangement to determine whether you're going to use the asset as an investment or a capital asset. So let me take a step back. Theoretically speaking, you would receive consideration in potentially two types of assets. Some that are a security, and that is really to no question. The government doesn't have the ability to direct the service capacity of a security for anything other than investment. So therefore, our practicality goes straight to fair value. Then you could potentially receive consideration in the form of a capital asset or even potentially commodity, as we were discussing. And in those cases, the government, a commodity, difficult to say is going to be an investment, but a capital asset could be classified as capital asset if you're going to provide services, in investment if you're going to use it for income or profit. And so the stakeholder believes that this determination should be made at the inception and just move on with that determination. So one government will have a fair value estimate, a different government will have acquisition value estimate, depending on that initial determination. But in addition, the concern then is, even if you make a determination of acquisition value on day one, and you get 2-3 years down the road, you receive the asset and you go, I changed my mind, I'm going to sell this piece of land or this building, then they should be able to reclassify the asset from a capital asset to an investment, because that reflects the economic reality of the use of the asset. Does that help?
Yeah, I mean, I guess, but what I think you're saying, right, is that could be burdensome for governments, right? This commenter is saying no, but we're saying, well, in certain cases, sure, maybe they can make it at inception, with a capital asset, and that's easy enough for them to do. But in other cases, maybe not.
So
in the maybe not case, then would we be living with this? You can't change the nature of the estimate you made, right? So, and do we want to really do that when we don't have to do that, because we have this other mechanism of at inception that is consistent with statement 72, not inconsistent with it, right? So why is that, what's the harm of doing it that way, right?
So the project staff wasn't necessarily overly concerned about the burdensome of the inception determination, but rather the inflexibility that we have in 72. So if we ask a government to make that determination at the inception of the binding arrangement, then it gives you no wiggle room to change your mind. The stakeholder says, oh, it is easy to solve. Just remove the provisions of paragraph 68 of statement 72. Well, that's not on that's not in the docket of solutions. And so for us, it wasn't so much about the burdensome issue as much as it was trying to find a workable solution to there is no reclassification of the asset, even if the usage of the asset has changed. For financial reporting purposes, it remains reported in the same way. That's what we were trying to overcome.
Paulina, tell me if this is the wrong way to think about it, but given the constraints of 72, why not give ourselves as much time as possible to know for sure how we're going to use it? Because once you make the decision, you're locked in. So if we can do it at fair value at inception and then allow them to make the determination when they receive it, we've eliminated the risk that they made a decision they regret, for lack of a better word. And so we just allowed for that time to allow to work with the constraints of 72. And now 72 is not a burden, even though it's not really a cost constraint per se. Does that make sense?
That's exactly what we were trying to alleviate, is cornering a government to make a determination at the inception, not because it's necessarily burdensome. not going to opine on the burdensome of issue, but it was rather, as Alan said, the constraint of 72 is that once you make a determination, 72 doesn't say an acquisition, a purchasing, enter into the contract. It just simply says at the moment you make a determination, you're locked with that determination. And so therefore, what we're trying to provide in here is that the determination can be made when you get the asset to provide you some wiggle room. We do recognize it creates complexity, and we recognize, as Joel alluded, the complexity at the beginning or the end is a choice. And it is complexity that is larger than 606. But as Maribeth explained, the provisions of GASB topic 606 does not include acquisition value, nor does it lock you in the determination of an asset classification. And so because of all the constraints that we have in our existing literature, we were trying to find the best compromise we could to this when the determination is made to be able to find a path forward.
Board responses to question 9. Robert?
I agree with the staff recommendation. I can see a scenario where you'd have an extended period of time. And something, and I'm going to use the building. You don't know, you may know what the fair value is at the inception of the binding arrangement, but by the time when the government actually receives the asset, things could change. You could have political changes. You could have other things where they're not going to use the asset how they initially intended. And again, from what Alan and Pauline say, locking them into the decision that was made, and it could, if it was years, in theory, it could be years, would not be, the accounting that they would need to use would not necessarily be appropriate. So I don't think it would be that complex. I may be oversimplifying it at the time they actually, make that determination, months or years down the road. But I support the staff recommendation.
Thanks, Robert. Diane?
I agree with the staff recommendation and what Robert said, especially about you don't really know until you've actually received it. And it could have changed from the time of the binding arrangement to the time that you actually receive that non-monetary consideration. And if that's the case, then you want a little bit of extra time to really think about what you're going to do with it. And so I agree with the staff recommendation.
Thanks, Diane. Carolyn?
And I also agree with the staff recommendation. I think it's a good compromise to provide the flexibility that, probably in a lot of cases it's not needed, but if it is needed, circumstances change, then the governments will have that. So I agree with the staff recommendation.
Thanks, Carolyn. Jackie?
I also agreed with the staff recommendation for the reasons that have been stated. In addition, to me, if we're talking about measurement of the non-monetary consideration, the best time to measure the value of the non-monetary consideration is when it's actually received, as opposed to when the binding arrangement is entered into or when we recognize a receivable. So to me, it makes sense that the measurement occurs at the time the consideration is actually received.
Thanks, Jackie. Chris?
I agree with the staff recommendation. I think my colleagues made some great points. I don't have anything additional to add.
Thanks, Chris. Jeff?
I think I sort of talked about some of my rationale in earlier questions, right? But I agree with the conclusion here.
Thanks, Jeff. I mean, essentially, I made this answer when you decide question 7 to me, because the only other, I guess, alternative could have been as the receivable is recognized and as the team points out in the paper, and Paulina said earlier, that if you're recognizing over time, how does that work? And that, becomes a really problem. So we were kind of, to me, kind of stuck with either inception, which we already decided in 7, or here. So we're here with the reasons we stated question 7. I mean, the one task force member was kind of talking, at least part of what they were talking about was the complexity I was talking about in the beginning, or the end complexity in which do you want. But, in the end, it makes sense to me, for reasons my fellow board members have said, to give governments that option. And Jackie talked about it being an elegant solution to not going against 72, and having more time to get to this answer. And you just create this complexity of, you got to adjust things maybe now, and now we've got to put, where are we going to put these adjustments? And that is adding, journal entries and things that governments are going to have to account for. It's going to seem kind of complicated, but that's the trade-off that we're making in order to give them the flexibility to make this determination at a time when maybe they have better information to make this determination. So I agree.
Moving to question 10, if the board tentatively agrees to propose that for category A and category B revenue transactions, a government makes a determination of the use of the present service capacity of the resource received as non-monetary consideration at the receipt of the resource, how should the government treat the difference between the initial fair value estimate and the final recognized amount? The project staff recommends that change in measurement attribute be treated as a change in estimate, and task force members who provided feedback generally agreed with the project staff recommendation.
Thanks, Mary Beth. Jeff, your hand is raised. Is that from last time, or?
It is, but I can start off if you like.
Sure. Yeah.
So this conclusion the government makes here is, I'm going to use this asset for service. Right. And then as a result of making that conclusion, they're going to get acquisition value, and they're going to make it as a change in estimate. So I agree with that. Conclusion.
Thanks, Jeff. Chris?
I also agree with the recommendation here, and I think that it emphasizes the whole underlying premise, right? Like it emphasizes the underlying premise. So I agree with the recommendation and support this.
Yeah, Chris, the underlying premise being that this was an estimate to begin with.
That this was an estimate to begin with.
At inception,
exactly.
We created an estimate that said, we're going to estimate this amount of fair value. We're going to estimate that fair value is even the right thing to use for this. And then we got to the end here because we gave you this option. You make this choice, and acquisition value. And so now I've got to change from that estimate I made at inception. So change an estimate makes sense, right? So I agree, but that's what you were going. I was about to say, I just agree with Chris because he was going to say what I said, and then you stopped short of saying it. So
I got too excited. You did a great job. I got too excited, and I felt myself getting tongue-tied. So I just wanted to stop right there. I was geeking out, and so I paused before the geek out. But I appreciate you grabbing the baton from me and taking care of it in a more articulate way than I would have done if I would have continued on.
Thanks, Chris. Jackie?
I agree with the staff recommendation for the reasons Joel said.
Jackie would have picked it up if I didn't. Diane?
I agree with staff recommendation, and it makes sense to use the change in estimates since we're working from an estimate to begin with. And I don't want to repeat everything that Joel and Chris said. I agree with what they said.
Thanks, Diane. Carolyn?
And I agree with the staff recommendation, and I agree with the analysis that both Joe and Chris and Diane and everyone else has expressed, that we're starting with the estimate. So this does seem the appropriate way to address any changes.
Thanks, Carolyn. Robert?
I agree with the staff recommendation. I concur with the comments raised by the other board members. There's the rationale.
Thanks, Robert. That's all of us, I think. Good.
Moving to question 11, does the board believe that for category A and category B revenue transactions upon receipt of non-monetary consideration, the difference in the fair value of the non-monetary consideration at inception of the binding arrangement and the fair value of the non-monetary consideration at receipt should be treated as a gain or a loss in the reporting period? The project staff recommends that upon receipt of non-monetary considerations, the difference in the fair value of the non-monetary consideration at inception of the binding arrangement and the fair value of the non-monetary consideration at receipt be treated as a gain or loss in the reporting period. And task force members who provided feedback generally agreed with the project staff recommendation.
Thanks, Mary Beth. Board member responses to question 11. Jeff?
I'll start this one too, because here I think we have the conclusion of the government that it's an investment. And because they have a conclusion of it's an investment, this is like any other situation where you have fair value, right? You take the fair value changes and you reflect them as gains and losses, right? Depending, right? So to me, this seemed to make perfect sense given the determination the government has made.
Thanks, Jeff. Diane?
I had to think about this one and the difference between this and 10, but I came up with the same conclusion that Jeff just said, that this would be in the case of an investment, and I do agree with the staff recommendation.
Thanks, Diane. Robert, well, Jackie was actually next, but I don't know. Go ahead, Robert.
I want to hear what Jackie has to say.
Go ahead, Jackie. She shrugged. She was going to let me have it, but
I agree with the staff recommendation. I'm not sure how else you would record a change in estimate other than as a gain or a loss. So yeah, it makes perfect sense.
change in fair value. Yep, Robert.
She beat me to it. I agree.
Thanks, Robert. Chris.
I also agree with the recommendation.
Thanks, Chris. Carolyn.
I agree with staff recommendation. It makes perfect accounting sense.
Thanks, Carolyn. I agree with the recommendation as well. Fair value to fair value. This would track how we report other changes in fair value.
Moving
We're
to question.
skipping 12 and 11, yes? Or no, I'm sorry, 12 and 13. Very good.
Moving to question 14, does the board believe that circumstances in which the changes in fair value of a non-monetary consideration arise for reasons other than its form should be addressed? The project staff recommends not addressing circumstances in which the changes in fair value of non-monetary consideration arise for reasons other than its form because the only examples provided are associated with options, share-based payments, or contingent consideration, which are issues that, one, the board has tentatively agreed to not address, or two, will be addressed at a future meeting. And the task force members who provided feedback generally agreed with the project staff recommendation.
Very good. Thanks, Mary Beth. Board member responses to our last question here. Jackie.
We want to make the meeting last longer, Joel. So I agreed with the staff recommendation on this. I mean, share-based payments and options, things like that, they just aren't even relevant in a government environment. And the other issues are going to be addressed in the future. So I agreed with the staff recommendation.
Thanks, Jackie. Diane.
I agree with staff recommendation. I agree with what Jackie just said. I just didn't see any connection with government in the examples that were given, so it makes sense.
Thanks, Diane. Chris.
And I agree with the recommendation and was along the lines of Diane, where I just didn't see where this intersects with government to the extent that we would go there.
Thanks, Chris. Carolyn.
And I also agree with the staff recommendation.
Thanks, Carolyn. Robert.
I agree with the staff recommendation and the sentiments expressed by my fellow board members on this question.
Thanks, Robert. Jeff.
Yeah, I wanted to see if anybody else divined anything more than what I thought I divined from this. Because trying to understand the change in form and what constitutes a change in form and what constitutes not a change in form, I think I came to the conclusion of my fellow board members that this doesn't seem to rear its head in governments very often, and so it doesn't seem like something we need to specifically address here. Or if there's other issues, we can deal with them later.
Thanks, Jeff. I agree with the staff recommendation as well for the reasons others have said. I didn't come up with any examples unique to the government that this would really apply either, so I agreed. All right. Thank you all. So any wrap up or see you next time?
We're working through the papers for next meeting in December, and will be something involving measurement for sure, and other things that we're still cooking up for you.
We look forward to it very much. So thanks, whole RER team. Appreciate all the effort. And there was a kind of complex paper, but you made it as easy as to understand as possible. So thank you for that. Appreciate everybody's contributions today and moving our project forward. We look forward to the next meeting, which will be the morning of December 9th on Tuesday. So we'll see everybody then. For now, meeting adjourned.